Hey traders, this is Blake Morrow with Forex Analytix, and you're listening to the week ahead video for November 19th, 2023. It is going to be a shortened week because it's Thanksgiving holiday here in the US. So I say shortened week, not for everybody, obviously, but for those of us that are broadcasting here from North America, we will not be broadcasting on Thursday. If you listen to our free face shows, just want to let you know that those will not be broadcasting. I will let you know, or if you listen to the face show or listen to the flow show, you'll know if they're going to be broadcasting on Thursday. Sometimes they do, sometimes they don't. And I think this week the flow show will be broadcasting. Do you want to know why? Because Thursday there's important economic data coming out of the Eurozone and the UK. So with that being said, just want to let you know the North American broadcast is not going to be going because of the Thanksgiving holiday, but you know, I would be sticking around for the flow show. Hey, I also wanted to mention, you know, one of the cool things about doing what we do, and watching like traders in our trader funding program, that's how you can access larger amounts of capital. You don't have to risk your own capital. Check it out. It's the link is down below you. If you want to see a video on how I passed an assessment, you can do that. But what's really cool is when you see the markets move in one direction and you see a bunch of traders pass an assessment, you know that everybody was positioned right. You know, there was a lot of that this week, which is really cool. And I think a lot of it had to do with you know, the way the dollar moved this week with CPI. I know a lot of you were long the pound, the sterling from last week, because we talked about it as one of the best setups. But we're gonna discuss all of that and more, you know, as we go through the week, or actually as we go through this show. I do want to remind you that if you want to skip all the, you know, what's happening next week and what happened last week and why, but you just want to listen to the best setups and a review of what we talked about last week, just skip to the end and you can do that. We've started doing that here over the last couple weeks, and I've gotten massive, we've gotten massive support and applaud for just putting the best setups at the end of the week. And I do want to say that was not my recommendation. That was a recommendation from one of you, the viewers. So as a viewer, if you got something to say, jump in the comments down below and make sure you give us a thumbs up if you like these videos, you think they're going to be beneficial to you and they are going into your next week of trade. We want to know that. Give us a thumbs up so you do, you know, if you really appreciate it. And then, like I said, if you have any comments or suggestions, I'm all about reading them. I'll read the comments. I go through them every week. So I'll see you guys and gals down there. All right, let's talk about, first of all, this week. And I'm going to sit back and just have a little bit of a conversation with you guys really quick. You know, as we go through, like, you know, what's happening next week. It's the U.S. Thanksgiving holiday, but don't eat the turkey with the tryptophan and fall asleep on this Thanksgiving. That was a really bad joke. And you know, hey, if you laughed, you can give me a thumbs up too. Tryptophan and the turkey, get it? You eat turkey and you fall asleep. And anyway, like I said, there's Eurozone PMIs on Thursday, and UK PMIs, German PMIs, French PMIs. We also have, which will be Thursday afternoon, many of us will be carving turkey at that moment that New Zealand retail sales come out. So just kind of a heads up. It's not like if you're trading, I'll quickly tell you a story. One of the biggest moves I've ever seen in the currency market that was I say it was non-news related. It wasn't. It was like a euro just popping through some stops when it was really thin liquidity, maybe in 2006 or 2005 during the holidays, and got like a 150 pip move. Because I used to actually go out before, well, when my kids were younger and before we had kids, I'd always meet up with friends or family and have a couple of drinks the night before Thanksgiving. And I remember sitting at a bar and watching, you know, quotes. So it must have been probably about 2007, 2008, something like that. But some big moves happen when there's not a lot of liquidity. So just heads up. All right, let's talk about what else is happening this next week. Next week we also have NVDA earnings. We have some earnings from. We're kind of wrapping up earnings season, but NVIDIA, and let me just take you over to the stock really quick. You know, just obviously one of the Everybody calls them the I can't even say magnificent seven. Call them the super seven. Right? Anyway, look at this massive resistance that we have here built up in NVIDIA. It's kind of like do or die time, right? For this market. You notice that massive divergent relative strength. Just keep your eye on NVIDIA. This could be a big mover, which could obviously impact risk appetite a lot, or could obviously spur some risk aversion going into next week as well. So NVIDIA next week. All right, let's kind of go back to what we're dealing with throughout the course of the week. So on Sunday night, China 1-year and 5-year loans are going to be, the rates are going to be, well, actually the market does not believe they're going to be adjusted. But the market's going to be looking for any type of adjustment on that Chinese data. Now, I don't think it's going to have a huge impact on the market, but I guess what you should be looking at is actually yields in general. And the reason, and there's a couple reasons why you should be watching these yields. We were talking about this on the Face show on Friday, I believe, with Dale Pinkert, K-Man, and myself talking about yields and about the move that it's impacting the yen. You're starting to see some yen strength, not just dollar yen weakness. You're seeing yen strength, right? You can see it kind of across the board. I'll come back to that in a minute. So just catch up a little bit later if you want to. The risk is that yields are starting to move a little bit here, and so watch maybe impact in the bond market and yields when China on Sunday night if they adjust that 1 or 5-year rate, just in case. Also going into the beginning of the week on Monday, we have Bank of England Bailey is speaking. Now Bailey's speaking at the Henry Plum Memorial Lecture in England. We should be watching that just because we talked about this last week about buying the pound down here, and you can obviously rally it. I was long sterling and captured pretty good pips, and I left a lot on the table because when you see a big bar like that, you don't expect us to just take out the 200-day moving average in one fell swoop from down here. After taking out the 50 DMA. So I took profits way too early, like, sub 124. Obviously, you can see that it went further than that. But what you're going to also notice is we're maintaining gains. And this is kind of the overarching theme with the FX market right now is the dollar is maintaining losses. If you look at the dollar index actually closed on its lows of the week. We'll talk more about the dollar moving forward. But, with Bailey speaking, if he sounds kind of hawkish, you need to be respectful of what the pound is showing you. Remember, we closed above the 200 DMA. Also, Monday, which will be actually Tuesday night, but RBA, Michelle Bullock, she is speaking. She's participating in a panel discussion titled "State of the Economy" at the Australian Securities and Investment Commission. Now, that's a big deal. But first of all, I need to point out that we are probing really critical resistance in the Aussie. You can see this right here. We actually set up a big evening star on, this was Thursday, Friday. The reason why the Aussie continued higher on Friday is because the dollar just weakened across the board. But if the dollar shows any signs of life, I feel that the Aussie is going to really struggle here. Now, this is the 38% retracement. So what that really means is, even if we get above the highs from last week, which happened to be at 65.42, if I remember the number correctly, let me see. It is, according to these charts, because this is a different feed, it was 65.42 and 0.7 of a pip, right? So according to those charts, that's as high as we want. But even if we breach those highs, we can get up to the 200 DMA, and you can see this resistance or supply zone that's going to come up there. So that comes up. The 200 DMA is going to be a big deal, even if Bullock is, relatively hawkish. Now, also, like an hour and a half later, we're going to have the RBA meeting minutes, which is going to be important because I think a lot of traders are wanting to know, is the RBA or you know, are they actually going to hike one more time? Which, you know, some analysts believe that the RBA is still going to do that. So that's going to be on Monday. Tuesday, we have Canadian CPI. Now look at the dollar CAD and look at how nice and tidy we are holding a channel support. You can see it right here. Let me grab, oops, right here. Channel support, but also the 50 DMA. Do you see how well that 50 DMA is being respected? What does that mean to you? That means that's freaking really strong support. So if Canadian inflation data is super strong for whatever reason, we break through that 50 DMA, and next thing you know, the dollar Canadian is going to really take a tumble. But the flip side is the dollar is holding up really well against the Canadian dollar. That should be respected. So if the dollar does start to get some sort of recovery rally in the next week, you know, you have to be respectful of the fact that we are holding the 50 DMA, we are holding that channel support. That's really important, especially with Tuesday CPI data out of Canada. Now, out of the US, we have existing home sales, and we also have, let me pull up the dollar index really quick. We have existing home sales, and we have the FOMC meeting minutes, and that's going to be on Tuesday. Now, you know, usually when we get like, I believe home sales as well, but when we get meeting minutes, they happen on a Wednesday. Everything's been shifted forward because of the holiday week. Like we're going to get weekly unemployment claims on Wednesday versus Thursday. So everything kind of shifted, right? So we're going to have meeting minutes. Now, my colleague and I came in on Friday during the Face show. We were talking about, you know, will the minutes count or not? And he doesn't think so because because we heard so much from so many FOMC meeting members over this course of the last week and a half. But remember, when you're at an inflection point of any type, and in this case it happens to be, are rates going to continue to go up, or are they, you know, is the next move going to be higher or lower? That's the inflection point that we are at right now with the Fed. Right? Is the Fed going to raise rates one more time? Or are they actually going to start cutting rates? Is that going to be the first move that the Fed's going to do? Now, from here until, let's just call it 5-6 months from now to, you know, the second quarter of 2024, the market's going to be on pins and needles. So, you know, this type of information, the FOMC meeting minutes, I believe will matter, especially when the dollar has moved so much in the last week and a half. Mark Chandler said it best: the pendulum swings both ways, and it swung pretty aggressively this last week with dollar weakness. So any sign that the Fed may be more hawkish than dovish could indeed swing the pendulum the other direction. So keep that in mind. Now, the dollar index, let's talk a little bit about this. We closed at our lows of the week. I get it. We also closed on pretty massive support, and just below that is the 200 DMA. So, and you know, I've been giving this loose channel here on the dollar index. So just keep in mind, we are very, very close to some massive amounts of support. You know, if you look at the daily sentiment index, there are some extreme readings. I'm not going to tell you what all the extreme readings are, but there's some extreme readings that could really lead me to believe that the dollar might have a recovery this next week. So just keep that in mind. Okay, continuing on. You know, we have after the FOMC meeting minutes on Wednesday, we're going to have the U.S. Well, actually, I say U.S., not U.S. I was going to say U.S. Mexican peso. The Mexican peso, we have not Mexican peso retail sales. We have, heck, forget it. We just have retail sales out of Mexico. How about that? Okay. So what we're going to have here, and this is what I think is developing with the U.S. dollar Mexican peso, is we have this long-term triangle support. Now, if you were on the trade-off show or listening to the trade-off show that I did with Chris Weston this last week, that's a Pepperstone show that I do once a week, and you should check it out if you don't see it. My play of the day was to be a buyer of the dollar Mexican peso when we reach 17. Now, you notice that we have a double top, right? And we are basically completing that double top. Also, the 78% retracement of this entire move, let me move this fib here. 78% retracement of this entire move is at 1702. Then you have triangle support. Now, why would I be buying in this downtrend Why would I be buying the US dollar Mexican peso at support in a downtrend? It's because if you don't recall from a couple of months ago, Banxico is reversing its program that it has had ever since COVID, which is basically was intended to strengthen the Mexican peso. And so they have reversed that program that has been enacted since, you can see in that blue line or a blue triangle, or excuse me, it's Saturday, and I actually got up super early this morning for a soccer match or a football match, and then I'm trying to film later in the day, which not a good idea, but I'm doing it for you anyway. Anyway, when they said that they were reversing that program, that was down here back in, what was it, September of this year. So after this massive move lower, I am now looking to buy dips in the dollar Mexican peso because of this central bank Banxico action. So looking for levels to be a buyer, like I said, those levels would be at 17 if we can get down there. So that's something that I think is a decent setup, especially with Mexican retail sales this week. Also, what is happening on Wednesday, we have durable goods orders. We also have unemployment claims, and we have University of Michigan consumer sentiment and inflation data that usually comes out on Friday, but it's going to come out on Wednesday because everybody from the University of Michigan, you know what they want? They want a 4-day weekend because they're at the University of Michigan. Just kidding. I'm joking about that, but it's actually probably pretty true. That's why they're not going to report the data on Friday, even though we are getting some U.S. data on Friday. The University of Michigan data that's usually reported on Friday is going to be on Wednesday, and the consumer sentiment and inflation data is specifically going to be watched very carefully as we go wrap up the week of trade on Wednesday. But that's not all that's happening on Wednesday. What else is happening on Wednesday is Bank of Canada, Macklem. He's speaking at the St. John Region Chamber of Commerce in New Brunswick. So just keep that in mind. Now, I know a lot of you will be at this stage in the game. You're going to be saying, all right, Blake, I am done. I'm going to go eat some turkey, and I'm going to watch some American football, and I'm going to eat a lot of tryptophan, and I'm going to fall asleep after I eat my pumpkin pie. That's your Thanksgiving. And that's going to be it, and you're going to ride off into the sunset. But for a lot of you, that is not exactly going to be the case, because on Thursday, we have Eurozone Eurozone PMIs. We have UK PMIs. We also have German, French PMIs as well. Now, let's talk about that for a second, because last week, or is it 2 weeks ago? 2 weeks ago, when I first started doing like my best setups, I was looking for the euro dollar to get to the 200-day moving average and quite possibly to 108.60, which is the 50% retracement. Well, we're above that, and we actually closed above that to wrap up this week. Now, here's the thing. It's going to be really important about the Eurozone PMIs, German, French, and Eurozone in general is going to be really important, because the theme of the last several months in the FX market has been the theme of U.S. exceptionalism. That means the U.S. data has been really good, but everybody else's has not been so good. Well, we're going to get the Eurozone PMIs Thursday morning on Thanksgiving, or it's going to be early in the morning, before most of you are even up and awake, maybe even baking that turkey when you're basting the turkey. But we got to watch it, because if that data comes in and it's not as good as expected, you're going to see a lot of this error that has been inflated into the euro give back. And especially knowing that we're approaching a really critical Fibonacci retracement level at the 618 at 109.67. So keep that in mind, guys, that we're getting into some pretty, I should say, gnarly resistance, from a horizontal resistance to the 618, knowing that we're going into this European data, which has been underperforming the US. Now, the reason why that's so important is because if that data misses, think about this really quick. If the data misses expectations, or the market is downbeat on those PMI data that come out on Thursday, on Friday, we have US PMIs. And if those come in stronger than expected, expect the US exceptionalism story to take hold again, and we could drop back below 108 and closer to probably the 50 DMA in thin liquidity. Thin meaning not a lot of volume, not a lot of people, not a lot of traders, not a lot of institutions to stand in the way of the market if it wants to move aggressively. Obviously, the flip side could be that the Eurozone PMIs come in better and the US PMIs start to weaken and the Euro trades above 110. If you don't think that's a risk this next week, you're crazy. Now, a risk? Yeah. For sure? No. You know, I want to see some more evidence that U.S. data is going to start to underperform European and UK data, but, you know, it could start with this week. So remember, that data is coming out this week. Now, like I said, UK PMIs, same thing. If you look at the pound, you know, the pound is obviously closed above the 200 DMA, but look where we actually closed at. Let me get rid of all these lines here just to avoid some confusion. We closed at the 38% retracement of this entire move lower. Now, I think if we continue higher, the next resistance is going to be at the 50% retracement at 125.75. Now, remember, it's not just UK PMIs next week. Bailey is also speaking. Bank of England's Bailey. And I know so many of you in the UK really adore him. That was sarcasm at its worst. Okay. Last thing on Friday, we have Canadian retail sales. We've talked a lot about the dollar Canadian. I don't think I have to say anything else other than that 50 DMA really does matter. And so does channel support. So that's you want to do this with me. This is your bull bear line in the sand. While you're above it, stay bullish. It drops below it, then you got to get bearish. And then also keep in mind that I think we do have, and I have to go back, and I want to say that we do have crude oil inventories this next week, but I'm not 100% sure about that because crude's obviously going to have a bit of a factor when you're dealing with the Canadian dollar. All right, now let's talk about a few other markets, and I'm going to give you my best setups. And I'm going to save the S&P because we talked about it last week, so I obviously got to review it. Right, so I'm not even going to go there just yet. But let's talk a little bit about precious metals because gold, I'll tell you, it's been holding up pretty well. You could argue with me right now, and you might say, Blake, that's a bull flag pattern. Could be, but it could also be a bull flag pattern this way. So, you know, I'm looking at the gold market, and I say it is very constructive for bulls. But in all actuality, the gold market needs to get above, let's just call it 2010. You know, I know it's 2011 and some change, but basically we got to get above this resistance. Let me just make it simple. We got to get above that resistance, and we get above that resistance, gold's going to take off, and there's a good chance we can challenge that triple, top all-time highs. 2010 is the level to be watching in gold, especially if we're going to get a bull flag pattern. Now, what else is important? Silver. Why is silver so important? Well, we got this inverted head and shoulder pattern that we talked about, but I hate to give you the buts, especially if you're a silver bull, but we stopped at a trend line. That's a big deal because this is, zoom out a little bit. That's a big triangle, a triangle consolidation, which if we are truly doing that, then that means this consolidation period is not yet over. Now, the other reason why that's a big deal, if you missed it, I'll just go ahead and clue you in because I know people were talking about it in the chat room. Stelios was out there talking about, hey, silver, watch it's up against resistance. Yeah, it's because we're up against the 618 retracement. That means that this 2420 level is an extremely important level for bulls to break. So if you're jotting things down on your Post-it note and pen, you should jot down silver important resistance 2420 and then put an exclamation point, and then you take that Post-it note and you stick it right on the computer or your forehead, whatever seems to work better. I'm going to leave that up to you. All right. So moving right along, let's go ahead and talk about the best setups for the week. Okay. Well, before we even do that, let's talk about the best. Let me do this. Draw that again, just so we have it. We're going to review the best trades or the best setups of last week. But before I do that, I need to say, hey, if you haven't tried out Forex Analytix, you want to jump in with one of the, the biggest trading communities out there. Try this community out, the Forex Analytix community. If you want to sit and talk to me all day and you want to just chat with me or any of our team members that are in the chat room, that's where we're at. Like literally when I get off of a broadcast and I take this microphone that you see here and I put it aside, what am I doing? I'm trading and I'm in the chat room talking to everybody, all of you guys and gals, right? So if you want to know what these chat rooms look like, it looks like this. Like this is the research room, right? Here's the trades room. You can see you can see, I'm short the dollar yen at 149.82 on Friday, because I shorted it right here because I was looking to fade the move out of this channel in the dollar yen. So I was looking for this move to fade into. So you would have known that if you're in the chat room because I posted right there at 9:40 in the morning on Friday. Okay. But it's not just me; it's other traders too. It's other team members. Ryan's usually really in there but he has had COVID this week. If you see Ryan on the Flow Show on Monday, wish him well. Hope him and his family are feeling a little bit better. But you can see here's the general chat room. You can just be inside of our community for $1 for the next 10 days. See if you like it. See if you like chatting with us. Try it out. Why not? Okay. With that being said, let's go back over to the best three setups of last week. First one was, if you recall, the NASDAQ 100 breakout is going to take the S&P with it. Do you remember that conversation last week? Right? So we talked about the NASDAQ 100 and it breaking out here. Let's go over to a daily chart. We talked about it breaking out here. We said this breakout here is going to carry towards this resistance, which you can see we stalled right around there. It's going to carry the S&P higher, probably from here to here, which it did. So setup number one from last week. Next one, US dollar Norwegian krona. Now here's the sad thing about the US dollar Norwegian krona. I was actually short, but because I was short too many dollars, when I say I was short too many dollars, I was actually long, pretty big size in pound dollar sterling, and I was short fairly decent size US dollar Norwegian krona. Both positions I had added to. If you were in the chat room and you were in the trades room, you knew. I actually closed out my US dollar Norwegian krona short, and I kept the pound long. I did great. Obviously, I would have done better in hindsight if I would have just held on to both, but you can't do that because you don't know what the risk is, before it happens, right? It was CPI data. So as that CPI data came out, the US dollar actually weakened. US dollar Norwegian krona broke, and it broke down as we expected. Now, we also talked about the pound going higher, which, like I said, I was long into that. So all three of those, worked out from last week. Now let's talk about this week. So this week, I want to talk about the euro. Now, I already explained the euro here. I think it's gone a little too far, and we're above the 200 DMA. We're approaching the 618 retracement, and I believe that any move towards 109.60 is going to offer a good place to be on the short side. I'm already starting to establish a short position because, like I told you just moments ago, I'm not 100% convinced that U.S. data is going to be weaker than European data, relatively speaking. So in other words, I don't think U.S. exceptionalism is that story is dead quite yet. Now, it might be after this week, but right now, I'm not buying it. Now, with that being said, I think that the euro dollar could stall on any rally to 109.67. That's the 618 retracement. So in other words, I'm looking for a move to here and then, looking for a reversal, right? So I'll just leave that there. Now, if you don't want to trade the US dollar, Euro US dollar, I'm going to give you a 2-for-1. Get a 2-for US dollar, Swedish krona. Check this out. We had a double top. If this continues to weaken, we're going to complete at 1040. And if we get to 1040, that means that double top has completed. That range extension has completed. You could look for a long down here instead of trading the euro dollar to the short side, if that's the trade you want to take. I'm just giving you a couple of options. In other words, buying the dollar on a little bit further of a dip. The next setup number 2, would be the Aussie yen. Why the Aussie yen? Let me take you to that multi-decade trend line. We broke it this week, and then we gave us a false breakout at the end of the week. So the risk here is if we break Friday's lows. So let me just illustrate that for you so you can see it. Okay. Do you see that? Let me continue drawing it. There you go. Let me continue drawing here for you. Don't go anywhere. Okay. We break back below Friday's lows. Then we break below that 38% retracement. So in other words, if we take out this support zone right here, then I think that you are going to see a much bigger decline in the Aussie yen. Maybe back down towards the 200 DMA, which is going to be, right where that horizontal support is. Okay, that spike low. So that's trade setup number 2. Number 3 is, I know we were just talking about the S&P, but guess what? We're going to continue to talk about the S&P. You know why? Because the S&P is approaching major, let me pull up a weekly chart, major resistance. And do you know why I think this is major resistance? Because what I think we're doing is we're developing a longer term triangle consolidation that's going to take us well into next year. So I believe that these levels up here, as we approach the, let's just call it 4550 to 4600, is going to be a good selling opportunity. Now, you notice how I'm drawing, we might go up just a little further and then roll over. Why is that? Do you know, I'm going to take a step back for a second and I'm going to ask you a question because I want you to think that these videos are not about me just kind of telling you this is what I'm going to be doing and this is what you should be doing, because I can't tell you what to do. I'm just kind of I'm giving you my plan of action. And hopefully you find it's valuable. If you do, you're just going to give me a thumbs up and say, thanks, Blake. I appreciate that. And the Forex Analytics team. But what's going to be happening in the next week or two that you can think of? Well, I'll tell you, one of the busiest shopping days in the United States is going to be on Friday, which is called Black Friday. And then on Monday, which is called Cyber Monday. Now, it may not be a big deal if you live in Cyprus or maybe in Hong Kong, but if you live in the United States, Black Friday is a thing. That's when everybody goes shopping after the day after Thanksgiving. They spend all their money looking for holiday gifts. And then Cyber Monday is obviously taking a lot of shine off of that on Monday. The following Monday is people will shop online at big retailers like Amazon and, Bed Bath and Beyond, Home Depot, Home Depot, not really, but Walmart, Best Buy, anything that's online. Because in the next week or two, we're going to really get a good feeling on how holiday sales are coming across. And I know I hate to bet against the U.S. consumer, but one thing the U.S. consumer is dealing with this year and last year, especially this year, because it's year number 2, they're dealing more with inflation than they've ever dealt with in the quarter century that I've been trading the markets. And since the 80s, really, since we've had an inflation shock like the one that we're witnessing right now, I don't think consumers are going to be holding up as well as expected. That's my thoughts. And if the market catches sense of that, that means that we might be due for a little bit of a pullback as we go into the holiday season, into the month of December. So with that being said, guys and gals, I want to say, next week, it's a holiday week. We will not be broadcasting the Face Show on Thursday. We probably, realistically, I'll be broadcasting by myself with Ryan and K-Man, and maybe a couple more European guys. I think Dale will take Friday off of next week, but I'll be there broadcasting with you on Black Friday, and because we're gonna have the US PMI data coming out, but it is a shortened week for us, so the broadcasting is going to be a little bit dicey on Thursday and Friday. So just keep that in mind if you're listening to our shows. Remember, they are free throughout the course of the week, the Flow Show and the Face Show. If you're listening, just realize that our hours might be a little bit cattywampus this week. All right, now I want to thank you all for spending your time with me. I know it's very valuable to you, especially over the weekend. And you spend that precious time, that 30 or 40 minutes with me every weekend. I appreciate you for doing that. So thank you very much. I'll see you on the Face Show on Monday. Have a great remainder of your weekend. Hey traders, this is Blake Morrow with Forex Analytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.